Before that, let's get to a corporate conversation then. It's Newgen Software, which reported a very steady set of Q2 numbers. The company's top-line growth came in at 23% on a year-on-year basis. On a year-on-year basis, we saw the margins also expand to 23%. To talk more about the quarter gone by and the second half of the year, Virender Jeet, CEO of Newgen Software Technology, now joins in. Thank you very much, sir, for joining in. This is Reema here. Now, in the first half of the year, you've clocked in a 24% revenue growth. H2 is typically much stronger than H1. So how is H2 likely to shape up for you? What are the key trends?
Good morning, Reema, and thank you for having me on your show. You're right. I think we have consistently grown on Y about 20% for now, almost last 10 quarters, and also with expanding margins. As you understand, the business is a product business, so margins do expand with the higher growth numbers. Our H2 revenues are generally stronger than H1 in terms of total value, which also puts more pressure on growth for H2 because the Q1, Q2 being on the smaller base, the growth rates could be higher. Having said that, we do expect to maintain the same growth momentum in H2 also. There's no reason. There's a strong funnel. Our traditional markets are doing very well, especially on the financial services, both in India, Middle East, and APAC. We continue to do well, and we don't see any challenge that we should not be able to sustain this growth.
So, Mr. Jeet, can we say that FY25 revenue growth would be 25 to 30%, anywhere between there?
No, I think we can't go there right now because, as I rightly said, we always try to project that we can sit somewhere between 20 to 25% of growth. And that's what we have been doing historically. And we base our assumption on that historical numbers. As I said, Q3, Q4 are larger quarters for us. And we expect to meet the goals of those on larger license deals. So there's a variability on that in terms of any kind of a change in that sometimes shifts the numbers. So I would still hope that we continue the current growth momentum for the whole year.
So guidance stays at 20 to 25% for the full year?
Yes.
Even though the funnel is very strong. Can you quantify how much better is the funnel today versus, say, 6 months ago?
So I think what we have pivoted, we have pivoted to slightly larger deals in all our geos. So in fact, the size of the funnel, number of opportunities may not be same, but we have on the value of the funnel, it has gone up by 30-35%. So we do expect that to translate in subsequent quarters into revenue for us.
Okay. In your press release also, you said that while banking and financial services continue to be your core verticals, you are seeing increasing traction in insurance and government segment in the quarter. Can you give us more details on this? How much contribution came in from here? Will this pie improve going forward? And will margins also improve if this pie becomes bigger? How does it differ from the other segments?
So if you look at the numbers, we predominantly are based on financial services where banking almost drives around 70% of the revenue. So sometime back, we really doubled down and tried to get our revenue share on both insurance and government. What we have done is we have invested in those. We have invested in both territories, building teams, refining products for that vertical. So the early green shoots of that have started happening. I think in this quarter, we had a significant deal in insurance at in Middle East as well as in India. We also had a significant deal on government side out there. So it's showing returns. But for it to become substantial, I think we are expecting that both what you call government as well as insurance are able to almost contribute to 30-40% of our overall revenue in next 2 to 3 years. For that, they have to become much larger than the current numbers. But I do expect that this momentum to continue. While as the margin has no correlation with that, because margin is a function of what we sell, and we sell in both cases, we have a license-based business. So every deal has a healthy gross margin, and we should continue doing that.
So you want insurance and government to contribute 30 to 40% of your revenues in the next 2 to 3 years, right?
Yes. Yeah.
What is it in terms of revenue contribution today, and what was the growth seen in insurance and government in the quarter gone by?
So the bases are small. Right now, both combined is going to be more like 20% of our revenue, approximately that number. And I think this quarter, since there have been some deals in both the area, the growth rates of that will be substantial. They will be about 30-40% in these areas. But that's on a smaller base. So I think the percentage does not matter. But we do expect that we keep on building this. And through this, we also accelerate the company's growth.
Okay. You know, while the growth has been broad-based, APAC in particular has done really well for you. Over 50% growth for 2 quarters in a row. Is this something which is sustainable? What's working there for you? And even in the US markets, what's the outlook? Because you have been focusing more on mature markets like US and Europe.
Yeah, you're right. So APAC, we started from a very low base last year. The last year, the deal closures in Q1 and Q2 was poor. So as a result, the H1 is looking much stronger in numbers. While I don't think a 50% number is what we are targeting, but I think since the base out there is small, it can grow at a faster speed. You're absolutely right. Our focus on mature markets is yet to really show results. What's happening, the traditional accounts which we have out there are showing business, and the current growth is more on, the what you call the opportunities in existing accounts. But and our new logo acquisitions has not really kicked in. Having said that, I think in next 2 to 3 quarters, we should be able to see both momentum on the financial services, that is banking, insurance, and we also do as a segment as health insurance out there. All three should start kicking in and contributing to that revenue.
Mr. Jeet, we have more questions, but out of time. It's a busy earnings season. Thank you very much for joining in and wish you all the very best. Get into a break. We'll come back and discuss market technicals. Mitesh Thakkar joins in on the other side.